All right, good afternoon, good evening, everyone. Today is Tuesday. It's the first full day of the week. Yesterday was Labor Day, so we were off. So, our goal here for this September 3rd, 2024, is to review the market generated information in a holistic fashion. We are intimately following the auctions narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate in the market today. The video is about 45 to 60 minutes shorter than it typically is. I had to run a quick errand and I had to shut down my computer abruptly. So please check the video if you'd like to see the first 90 minutes of today's RTH and the prep that we did in the morning. We use this as a tool for our professional development. All right, let's begin. So we'll start with our narrative and combine it with where we're coming from. Um, we won't belabor this, but just the continuation of the bull flag, impulses, the coiling, the impulses, and then this 2 week balance range for the last 2 weeks of the August. We finish with a nice close for the S&P 500 at the top of the range to end the month, and then more of like the midpoint of that 2 week range for the Nasdaq. So of course you can look ahead and get a little clue and see how we finished or see the answer. But just some general context where we're coming from. Bull flag consolidation. We're at that high point. We've been having some issues with the 5670s, the high 60s for the longest. We could not get above that area, and it was the really we couldn't stay above the 800s. We couldn't get to the 2000s and stay at it, but we couldn't stay at the 19,800s for the Nasdaq. So their goal really was just to stay within that zone of the higher 50s, higher 60s for the S&P 500 and the higher 7, 800s for the Nasdaq. And how well did they do? We can look at that a little later on. But clearly they didn't do, too well looking at the daily candles. But we need a little more context from there because it was some important information that happened. So overall, there's no real geopolitical um, events that I'm aware of. No real big earnings, but we do have earnings. Not earnings, but we do have economic data. So this is the earnings here. Not really too much. You can just pause. Nothing at all for today. Very light for the remainder of the week. But the majority of today was data. We had our 6:45 PMIs and then our construction spending and ISM manufacturing for 7 o'clock. They didn't have the biggest reaction for that specific scene of the crime or SOC, but it was a lot of follow through from that point. So take with that as you will. So you've seen the daily candle. Let's look at the daily candle for the footprint for the S&P 500. And you can see there was a not much volume at all. Here's the volume for yesterday. It's about 100,000, and we're almost at 100,000 right now. We've only been open for 3 hours in the overnight session. So yesterday, not really too much happened, but at the same point, um, this is just a more of the calling range. And as the session ended, we immediately started trading lower, and that's what you can see here. There's no kind of volume done from these 56 60s down to the 30s. And then if you've been following, we've been talking about the sellers really eating up all kind of liquidity this whole time here and no progress from the buyers. It seems the buyers got a bit exhausted or just fed up. And at this point, this is considered expensive. And this was heavily discounted by 150 points for the whole day. It's not like this was a bid pool and the buyers just let the price drop. There was a fight throughout this whole way from the 5630s to the 20s to the round figure, and then even below, especially at these 80s and the 70s. Though the VPOC is near the lows, which is towards the end of the day, there was a huge fight that was put here in the 70s to the 90s, the 5570s to the 5590s. So we can look at that on the market profile. I'm sure we have some singles in here, but we'll look a little deeper with the market profile. Looking at the volume, you can see this is the most volume we've had since, I have to zoom back, since the first week of August. So again, we'll look a little higher time frame shortly, but we have this 2 week balance range. And then this range cannot be broken to the upside, but it is broken to the downside with high volume and heavy sell delta, with the sellers being in very nice positioning from what we can tell, and buyers being off balance, not including all the buyers from here. And even if we factor in all the sellers that we've seen this entire time from these 55.60s all the way up to the 56.60s for 100 points of sellers, these guys are now in the money. So I would imagine it's a possibility they may get more aggressive and the buyers may find themselves off foot. But that's getting a little ahead. It's being a bit speculative. So I won't get ahead of myself. My point is, we're breaking out of a 2 week range with higher volume, and heavy sell delta. If we look at the NQ, again, we understand how they're structured a bit different, and they were coming from the midpoint of this range. But same situation, you can't get above. And there was a hard fight this whole way down. And buyers just couldn't catch a break. A lot of ill-positioned buyers here from the 200s to the 100s. It's profit taking, new money buyers, who knows? But yeah, it was definitely a tough day. But all right, we can only glean so much from that footprint. Before we look at the market profile, let's go back to the sector tracker for the S&P 500, who was down 2% for the day. The Nasdaq was down 4%. The only green we have here is consumer staples, real estate, and then we'll go ahead and throw in, I guess, nominations for utilities and healthcare. Those negative, nowhere near as bad as anyone else. So definitely a defensive posture here, but I heard someone say when it's like a real bear market or when there's real selling, there's real fear, there's no place to hide. So this is not as much breadth as we've been seeing recently, looking at the 5 days, or really the 1 month would be a little better. So this is a nice pullback from everyone looking back at the 5 day. The majority of this is just led down by tech. NVIDIA is extremely important to the market and to all. This is just not loading at the moment. That's fine. But NVIDIA was down like 9%. I think like almost 10%, I believe. And then we have the followers being energy, who doesn't have the biggest weight, and industrials. Industrials does have some weight. For them to be down 2%, that's not, it's not good. Followed by communications and discretionary. So we're just seeing some selling just across the board. Luckily, utilities, healthcare, and financials was able to do somewhat decent. Financials actually started out really well at the beginning of the day, but they ended up selling off about like 30 or 60 minutes into the open, and it was just noticeable. We were looking to them to see if they were going to be able to hold things down, but they didn't. And then this was just all out sell off from technology and some of our other sectors, but we won't belabor that. All right. So we don't have enough information to understand how good of a job sellers did, but definitely from the buyers, we can tell that they put up an effort and they got squashed today. But as the sellers are becoming the more the stronger side, the better positioned side, the story, the narrative is going to have to come from the seller's perspective as of now. So moving forward, we'll start looking from the seller perspective after tomorrow. But today, we'll look and see how well of a job that the buyers did, see if there's any key points. But let's look at this from the market profile. Days like this, when we run away from value, interesting to see where we landed. So again, this will be the holiday session, the Sunday night and the Monday. It's only open for not as many hours. So we're actually going to just take a quick look at this. But we sold off a little bit and closed near the highs. We'll have to double check. And then as we continued from there, from the overnight session, we looked above tried to hit those singles, which we've been talking about for the longest, could not reach those 19,700s, and then just lower highs and lower lows the entire time. Noticing where we began to coil, and we'll look at this on the candles, but we started coiling below this composite from August, and then that's when we had our RTH, and we had an open drive down, immediate repricing back to this lower volume node that we've been talking about for the longest. So we can have more volume, possibly some activity there. And again, we won't belabor the point here, but we basically went from this high populated volume point of control zone and heavily thrusted down, breaking these levels, immediately repriced to these poorly auctioned areas that we kind of just zipped through. And if you don't recall, we can just look at it. These same thinly traded areas, you can see we just zipped through, came down halfway, coiled a little bit, zipped through, coiled a little bit. So now we're finding our way back in here and actually getting some price action traded like we did above. So if you put these together, you can see coiled below that range and then just completely shot down. Now we're back into the support zone that we drew. And we're actually trading below that as of right now. So again, after we finish this video, we're going to do our singles because we definitely have some singles here. We have 1, 2, 3, 4, 5 with an excess. So we'll do our singles here. Definitely some urgency today. There may be a place that price revisits in the future. We don't need to do any other zones because we know where these areas are, and we would imagine we're going to see some activity, if not volume, build there. This is going to be the same situation for the ES, but the only difference here is that there was a lot of sturdiness, but only sturdiness, not willing to trade higher for the S&P 500. We're going to merge yesterday and today together. And the reason I mention that is that do remember that the majority of the volume that we've seen since we've stayed here at these highs is right here at these 5640s, like this zone here. So as we were compiling and compressing, just all kind of volume here from the prior composites all the way back to April, from April to the end of July, this is the most traded area. These 56, 50s, 40s, and 60s, and then even for August, all the volume, the majority of the volume was down. After the first week, the second to last week of August was all the majority, the most volume, the most traded volume of the asset was done within this range here. My apologies. With that being said, we coiled more over the holiday, and as we open for Tuesday with the Monday night session, we looked above. We tried to look above again, and we made a lower high. Completely sat down, and in the same situation. This is yes, the NQ is much weaker than the ES, but it's incredibly important that this high volume range has been completely like loading up a cannon and then completely shot down 100 points. This isn't really normal for the S&P 500 to do in this manner, especially leaving these singles. I think this is one here. 1, 2, 3, 4, 5. Yeah, it's like 5 or 6 singles here. So just very aggressive with much urgency. So a big discount by 100 points. We're no longer talking about 56 50s and 60s and 40s and 30s. We're now talking 55 50s, 55 40s, 55 30s in one day. So if we end up merging these profiles, same situation, recoiling, top range, pum, in one range. Now we're eating up these singles from 815. So We won't belabor that, but we just want to look at the market in the in that organized fashion there. We're going to look at our intraday here. Looking at the footprint, really not too much to talk about because we saw it on the market profile, just lower highs and lower lows the whole time. Um, nice positioning for the sellers. No real pushback from the buyers. Any price upwards was completely stuffed, and just much aggressive selling at the lows of each candle. That was an ugly one. That was for the NQ. Same situation here for the ES. Just taking a quick look at the 138-minute candle. Feel free to stop it. But I just like to see what other people are seeing. You know, of course, this isn't an hourly. This would be 2 hours and 18 minutes. But being able to see, okay, thank you. But being able to see just where we're coming from on a structural standpoint, we are back in. We just pierced through this high volume no zone from the market profile. But just even where we are, just from a candle perspective, just like being able to see what others are possibly looking at. All right, so we have this there. It's the same situation here for the NQ and then the ES. All right, then let's go ahead and look at the candles. So again, you can see the overnight session for Sunday and then the decent close for Monday, closing at the top of the initial balance. We open on Sunday, looked above, steep sell-off, balance, tried to make a new high and sold, lower high, still making lower lows. And then the fact that we started to coil, I think it's important to understand where are we coiling from. We're coiling below Monday and parts of Friday, Thursday, and Wednesday as well. So the fact that we're coiling at the bottom of these ranges and we already have like a lower high from above, that's 40, 60 points. I mean, that's 40, 50 points above us from the overnight high. This is just absolutely the worst start for the buyers. And we talked about this in real time. Again, you can look at our video as we did our prep. And then as we start our session, again, no 5:30 data. We had our PMIs, which is somewhere in here. Then we had our 7 a.m. data, which is what this purple zone is. Just the high and low the first 3 minutes. So I mean, this was just an open drive, but it's important to understand where we doing the open drive from. We failed to make a higher high. We're consistently making lower lows and lower highs for the overnight session with extreme range relative to what we've been seeing recently. And we're coiling in the middle of the range, which is lower from where all these people have bought. As we're coiling and then we open up with the RTH, we have an open drive for this first bracket. We are coiling and exploding lower to start the session. With the PMIs, with the B bracket, we're still trading lower from this SOC. We're still below the initial balance. At this point, just buyers couldn't really do anything, and that's what we saw in the footprint. Anytime they looked above, they ended up being sold under. The only little small rally was towards the end of the day. That was just probably just short covering rally. Who knows? But we're even drifting a little lower so far in the overnight. So sellers may have caught the buyers off guard. We'll look at the same situation here for the NASDAQ. You can just notice where they were coiling. Same situation. We open up. They have no real separation from their open and their initial balance high and high of day. Just straight catapult down. There was an attempt from the buyers here for this 7 a.m. data, completely stuffed and just trading below this initial balance. Trying to hover here. Their only hope was really technology. ES was pretty weak in the morning. Tech was trying to hold things down, but they got stuffed. And once they had this big engulfing candle from this SOC low, same situation, just lower highs and lower lows. Couldn't get anything going. So fairly simple day. Again, high to low. This was a big range overall with increased volume. So that's pretty textbook. All right, so let's see if we can look at our final wrap-up notes. All right. So again, we are breaking out of a balanced range, and we close under the balanced range with increased volume and the same delta in that direction. There was a lot of singles that was done today, so just urgency across the board. You can see that on many levels. The buyers did not do a great job today of supporting price, and the sellers ended up being able to change the narrative and starting the week really strong on a Tuesday, catching people off guard. This is the start of September, which has some history with being negative. Um, I'll let you do your own research with that. But again, just to wrap up our notes, sellers came out swinging. They haven't stopped the pressure over the past week or two, and they were able to really crack some support. And once they had the opportunity, they actually stayed under it to start September. So very nice positioning and nice follow through for them. Do remember that we have this overhead supply above us. So in immediate terms regarding momentum to climb back up this balance zone here, it is going to take a lot of effort. But you know they've done it before. But this was a different context from where we are up here. There has been some NVIDIA news, something about an antitrust. Again, you can find different resource there. Just make a comment on that. It's important to see how the overnight trades for today going into Wednesday. Again, we do have some data for tomorrow. So if the sellers really want to take control of the narrative, they want to ensure that they are following through with the overnight session. They don't have to completely stuff them and have trading lower, but we really shouldn't, see much legs up overnight. If so, that may be an indication of more balance. Let's see. So again, this is quite good positioning from the sellers. They're just coming from the top rope, from the top of the balance, and really putting some umph in their selling to start this September. We have a lot of thin structure below us, so we can find our ways into a vacuum, brush through the singles, and we'll find our way back into the prior contracts premium. And do remember the contract should expire this month for the current contract, and we'll go to December. So if we end our futures contract at the same price or less than where we started, I think that's just going to be a really bad look from a contextual standpoint that's following the narrative. Just make another thought about the bull case. We've seen this many times where the sellers will start off extremely strong and the bulls will end up green. We saw it here and here. But again, this is the start of the month, so this can get extremely ugly, and we may find ourselves right back. Who knows? But just really important to respect that the Bears did have immediate control for the longest, but we needed more information through here because it was just a lot of back and forth trading. But now we have more information, and it appears that this is indeed a lower high. And if that's the case, we should have some more progress here. And on a retest, really the 5600s should be protected for the sellers for the S&P 500. And I do believe that is it. So yeah, we're gonna go ahead and stop it there. It's gonna be an interesting. Watch the volume, watch the delta, watch the overnight drifting, whether it's up or down. Have a good night. Please get your rest.